Hello there. First of all, thank you for being a member at myfinanceteacher.org. I really do appreciate that. I do try my best to come up with as much value as I can to the members. Here I'm coming with a new uranium report for March this year. First, looking at uranium prices, as you know, I do believe that it's important to look at market cycles, which are basically a translation of market sentiment into the prices. Generally, over the last 2 or 3 years, the uranium cycles lasted for just under half a year, for an average of 158 days. But they do seem to be quite tricky because there is quite a lot of dispersion in the duration of those cycles, lasting anywhere from 104 days to a whole 249 days over the last 2 to 3 years. Looking at the ongoing cycle, it's now 74 days long. With Monday, this will actually turn into 76, 77 days long. So while there is some potential for another marginal push higher, perhaps another poke above the Bollinger Bands, there is also, on the other hand, some risk that the market is about to top relatively soon. We've seen RSI recently very high into overbought area, and it's already started descending, so we do need to take into account some level of risk over here. The Bollinger Bands are quite wide, and the price has already poked above those wide Bollinger Bands. Again, there might be one more poke before the cycle actually turns down into the cycle low. Zooming out a little bit, looking at the weekly charts, if the cycle continues higher for a while, we don't really see much resistance on the chart until the 2011 highs. That's just under $70. So the potential is still there, as the cycle is probably just now about to approach its midpoint. The cycle is not extremely old, but it's also quite likely, with I would say a 40% chance, that the cycle has topped recently. Next, looking at URA, I think there is still potential for URA to push a little bit higher. There is a bit of a resistance right now, somewhere around 26.2. Over the last week, we see URA hit that resistance, come down to support level around these 3 moving averages, the 250-day and 20-day moving averages, before pushing again against that resistance zone. I think there is a good chance that URA breaks above that resistance and perhaps moves closer to the next resistance that's somewhere around just below $30 based on that October high. And even if that level isn't reached, there is a chance for another 1 or 2 pokes above the gradually widening Bollinger Bands. Looking at the ratio of URA to the uranium price, we see that it has actually come down over the last year or so. And at the moment, this ratio is at the lowest level since the beginning of 2021, late 2020. So the uranium producers here are at record oversold levels versus the uranium price over the last 15 to 18 months. So I think there is a good potential for URA to catch up a little bit with the uranium price, even if the uranium price doesn't really make significantly new highs in the ongoing cycle. All of that, though, is short-term to medium-term. In the longer term, I am pretty certain that the uranium industry should do extremely well. So let's look at some of the longer-term developments. First topic I want to talk about is longer-term contracting that is catching a new wave over here, and that's going to be very important in the longer term. Of course, for us as small investors, it's hard to find any significant evidence of the contracts between the producers and the nuclear power generators. But recently, Cameco mentioned that since the beginning of 2021, they've added 60 million pounds to their long-term contracts. And that includes 40 million pounds, so more than half of that, only since the beginning of 2020. So it does look like this long-term contracting is really catching up. A new wave is accelerating, especially more recently. Another interesting evidence is a statement from Sprott Asset Management mentioning that some power generator somewhere in the US is looking to buy 9 million pounds starting from 2026. Yeah, it's kind of interesting, but At the moment, I'm not sure if it's 9 million pounds per year, or is it 9 million pounds in total within some sort of long-term contract lasting for a few years. In either case, though, there will be hundreds of more nuclear generators swooping into those longer-term contracts over the next 1 or 2 to 3 years. So that will definitely be a very important driver for uranium industry going into the future. So that's what's interesting on the demand side. On the other hand, on the supply side, there is also some interesting development, interesting evidence that some producers have been talking in some of their recent discussions about production discipline, limiting the production below their licensed levels. I've heard that from discussions by Kazatomprom, and I've heard that from some discussions by Cameco. So it looks like some of the larger producers understand the enormous long-term growth potential in the uranium industry. And of course, they want to take advantage of that by limiting current production at relatively lower prices in favor of future production at likely significantly higher prices. Some evidence from that is that while Cameco has restarted its McArthur River mine recently, that doesn't seem to provide much downward pressure on uranium prices. And to counter that restart, Cameco has actually mentioned that they are reducing the Cigar Lake production. So the net increase in the total production is only going to be around 10.5 million pounds in 2024. Another thing that is interesting to mention over the next 1 to 2 to 3 years is that the black swan events, such as the ongoing Russia-Ukraine war, might actually drive prices to an unexpectedly high levels. Looking at this recent black swan event, Russia, for example, provides a whole 20% of uranium consumed by US nuclear generators, and Russia accounts for 43% of global uranium enrichment. A while before that, we remember some political instability in Kazakhstan, which is the largest uranium producer in the world. So going into the future, over the next 1 to 2 to 3 years of a uranium bull market, it's not impossible that other black swan events like these might spike uranium prices far above any expected levels. Another interesting driver, which might actually play out sometime in the medium term, is the expected takeover of URNM by Sprott, and that will turn into a Sprott Uranium Miners ETF. It was expected to happen in late February, but it didn't. Looks like they didn't have enough shareholder votes for that. In either case, I think it's likely to happen sometime over the next few weeks to a few months, and this might be an interesting driver, especially for URNM. As you know, the model portfolio already has a sizable allocation to URA, so perhaps I might actually try to pick up some more URNM sometime soon as well. Next, I want to have a look at a few slides relating to green energy and climate concerns. Kazakhstan, for example, again, as I mentioned, the largest producer of uranium, is considering its own nuclear generators for a couple of reasons. This electricity deficit that partly led to that instability recently, and also due to those climate concerns. Talking about those climate concerns, recently the EU Commission approved nuclear power as green and sustainable. So that's really amazing. But next, we'll have to have EU Council and EU Parliament to approve that as well. And that's very likely to take place, because rejection, on the other hand, is not extremely likely. Rejection would require 20 of the 27 member states. So this is another positive driver, perhaps over the next few months. And if the EU Council and the EU Parliament do approve nuclear power to be green and sustainable, then clearly over the next years to decades, EU is going to invest quite a lot into nuclear generators. So far, we've seen plans of at least 50 billion euros by 2030 and 500 billion euros to be invested into 2050. Those funds are clearly going to be used for extending the life of existing reactors, as well as building new reactors, adding to the demand side of uranium, And again, all of that is going to be an interesting positive driver into the future. France, for example, which is, by the way, a European largest electricity exporter, plans to increase electricity production by a whole 60% over the next 30 years. So with these plans, if France also wants to stay green and reduce its carbon emissions, that clearly, again, is going to require a lot of investments into nuclear power. There were a bit more details coming out recently. In February. France plans to extend the life of existing reactors and to start building 6 new reactors with 1,650 megawatt each. But not all of that is going to be a net new generation. Some of that is actually going to replace existing reactors. So there is a bit of a caveat there. And another negative news that we should take into account as well is that the US doesn't actually allow extending the life of 3 of its nuclear power generators into this unprecedentedly long 80-year life. But despite this development, again, I am pretty certain that the long-term potential in uranium industry is outstanding. Lastly, Pakistan, for example, plans to increase its nuclear power consumption from the current 2,200 megawatts to a whopping 40,000 megawatts by 2050. Again, if they do act on these plans, that's going to be one more of those numerous positive drivers for the uranium industry. That's all for now. Have a productive Monday. And again, thank you for being a member at My Finance Teacher.